Ladies and gentlemen, good day and welcome to the Kolte-Patil Developers Limited Q1 FY26 post-results earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone telephone. Please note that this conference is being recorded. I now hand the conference over to Mr. Smith Shah from Adfactors PR. Thank you, and over to you, Mr. Shah.
Yeah, thank you, Shruti. Good afternoon, everyone, and thank you for joining us on the Q1 FY26 results conference call of Kolte-Patil Developers Limited. We have with us Mr. Atul Bohra, Group CEO, and Ms. Dipti Rajput, Vice President, Investor Relations. Before we begin, I would like to remind you that certain statements made in today's discussion may be forward-looking in nature and may involve certain risks and uncertainties. A detailed statement in this regard is available in the Q1 FY26 results presentation that has been shared with you earlier. I now hand over the call to Mr. Atul Bohra, Group CEO, to begin the proceedings of this call. Thank you, and over to you, sir.
Thank you. Good afternoon and a warm welcome to everyone present on this call. Thank you for joining us today to discuss operating and financial performance of the company for the quarter ended 30th June 2025. Before we begin, I am happy to share that during the quarter, Blackstone Funds has acquired 14.3% equity stake through preferential allotment, infusing rupees 417 crore in the company, which will largely be used for the growth capital. We are excited to embark on this journey with shared vision to accelerate expansion, drive innovation, and reinforce leadership in the dynamic Indian real estate sector. SEBI approval are awaited for the open offer. We will notify the progress of the transaction in the due course. I would now like to share my view on the real estate environment, followed by an overview of key development for the quarter. Dipti will then take you through the key financial highlights. Following this, we will open the forum for question and answer. In the first half of FY25, we have witnessed geopolitical tension, uncertain global trade environment. However, there were several factors that helped keep sentiment positive. The sector benefited from 100 basis point repo rate cut by Reserve Bank of India, bringing the rate down to 5.5%. This move, along with the reduction in CRR, has significantly improved liquidity in the system, lowering the borrowing cost for home buyers and making housing more affordable. It is also encouraging to see inflation cooling down. These positive macroeconomic factors have helped boost affordability and maintain the positive buyer sentiment. In Pune market, the residential segment appears to entering a more measured phase of growth, with demand driven by end user seeking lifestyle upgrade, and infrastructure growth is helping the real estate sector. We see opportunity in growing premium housing segment growing in the Pune region. On the other hand, Mumbai region is poised for transformation driven by a wave of infrastructure development set to improve connectivity and reduce travel time. These upgrades are making city living more convenient and expected to create significant demand in the key micro markets. Overall, we believe the combination of lower interest rates, improved liquidity, stable inflation, and evolving consumer aspirations set a positive foundation for the sector going forward. At KPDL, we remain focused on scaling our launches, accelerating execution, and delivering value across all the stakeholder groups as housing cycle continue to strengthen. With a trusted brand, established presence in key markets, and a strong track record of delivery, we are well poised to capture the emerging opportunities in this evolving landscape. Coming to the operational performance for the quarter ended 30 June 2025. During the quarter, we registered sales volume of 0.84 million square feet, reflecting a 5% growth over previous quarter. This translated into sales value of 616 crore, driven by significant contribution of sustenance inventory across key projects. Collections stood at 550 crore, remaining in line with the contracted schedule. Over a 4-year period, collection have grown at a CAGR growth of 21% as a result of construction and operational efficiency, healthy pace of project execution, and strong customer relationship management. Resultantly, operating cash flow stood strong at 164 crore. Our flagship integrated township project, Life Republic, continued to be a strong contributor to overall performance, recording sales of 0.53 million square feet during the quarter. The project's scale, thoughtful planning, and community-centric living approach have made it preferred choice among the home buyers, reinforcing its position as one of the prime development in Pune. In Q1 FY26, our average realization stood at 7,337 per square feet, maintaining a stable pricing level. This reflects the continuous customer confidence in our product offerings and the value our development brings to the buyer. As we move forward, we are optimistic about the year ahead. We have robust launch pipeline with key projects planned across our core market. These upcoming launches reflect our confidence in underlying demand trend. On the business development front, we continue to actively evaluate a strong pipeline of potential opportunities across focus market. With a disciplined approach and clear strategic filters, we remain confident of securing value accretive deals that align with our long-term growth objective. We will share more details as the current transaction conclude. As you are aware, we follow on a CCM method based accounting method where revenue recognition is based on completion of possession. During the quarter, revenue remained muted. In the coming quarter, there is strong pipeline of completion and we expect a steady growth in revenue recognition. Coming to EBITDA margin looked impaired on account of lower revenue recognition coupled with fixed cost recognition, which is charged to P&L. FY25 EBITDA margin at 13% showed a strong improvement over previous years. This year also we expect further improvement in EBITDA margin. As an ongoing process, we are constantly working on improving cost effectiveness, project timelines through streamlining internal processes, and proactive monitoring of cost to complete. Simultaneously, over a period, we have seen an 8% CAGR growth in APR, which will further help us expand margin. Looking forward, our continued focus remain on sustainable growth, operating excellence, and consistent delivery across all the key performing metrics. We are excited to enter the next phase of our journey and are confident in our ability to scale new milestones and create long-term value for the stakeholders. With this, I now hand over the call to Dipti to share the financial highlights.
Thank you, Atul. Good afternoon, everyone. I'd now like to take you through our financial performance for the quarter ended 30th June 2025. Based on CCM-based accounting, we clocked total income of rupees 96.8 crore for Q1 FY25 as compared to rupees 350.3 crore in Q1 FY25. EBITDA for Q1 FY25 stood at a negative rupees 11.2 crore as compared to rupees 39.7 crore for Q1 FY25. PAT stood at a negative rupees 17 crore during Q1 FY26 as compared to rupees 6.2 crore in Q1 FY25. As you are aware, revenue recognition in our business is closely tied to project completion in accordance with statutory accounting standards. With steady progress at our construction sites, we have been able to maintain consistent collections reflecting both our execution strength and the sustained demand for our projects. Our cash flows for Q1, operating cash flow for Q1 FY26 stood at rupees 164 crore as compared to rupees 247 crore in Q1 FY25. Net debt stood at a negative rupees 320 crore as compared to negative rupees 37 crore as on 30 June 2024. Additionally, the equity infusion from Blackstone during the quarter has further strengthened our capital base, enhancing our liquidity position and supporting our growth ambitions. Thank you, and I now request the moderator to open the line for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Matangi from Motilal Oswal. Please proceed.
Hi, am I audible?
Yes, ma'am.
So I have two questions mainly. So given the new 417 crores pumped in by Blackstone, I'm assuming some amount would be towards the capex. So I'd like to know the split, sir. How much is towards working capital and how much is towards capex? Also, what is the total budgeted capex for FY26? My second question is, when can we expect OPM percentage to start being positive again?
Yeah. Thank you, Matangi. So to answer this question, the total equity infusion of 417 crore by and large to be utilized for the growth of the organization more aligned towards the PD, but at the same time 100 crore, 105 crore is been earmarked as an for the general corporate purpose, and rest of the capital we are targeting to be for the growth capital, including premium and FSI and all that related cost.
Understood. Thank you. What about the OPM percentage?
So this quarter operating margin percentage is 35%.
Yes. I mean, when can we start expecting it to be positive again?
So going forward, as I already mentioned that last year also we have delivered a better EBITDA number as it has improved over a period of last couple of years. This year also we hope that the overall gross margin and the EBITDA number will gradually grow, and we see the gross margin in the range of around 25 to 30%, and the EBITDA will remain in the mid-teens.
Understood. Thank you.
Thank you. The next question is from the line of Dhananjay Mishra from Sunidhi Securities. Please proceed.
Yeah, thanks for the opportunity. So would you like to comment on launch pipeline in Pune and MMR region, which all projects you are certain to launch in this financial year?
Yeah, thank you, Dhananjay. So Dhananjay, we have a strong pipeline of launches during the financial year. We are looking a total pipeline of around 6 to 7 million square feet across Pune and Mumbai region. More specifically at Pune, we have an IBM project which has secured almost all the sanction, including environment clearance and building sanctions, and most of the NOCs are in place. We are in the final leg of RERA approval. So an IBM we can definitely think of in coming quarter to get launched. At the same time, the new BD what we have acquired, Vadgaon, so that has also progressed well in the overall approval cycle. This also we can expect during the financial year. Kharadi project, which can be expected at Life Republic. We have secured few of the project, few of the sector sanction already. Few sectors are in the pipeline of approval, but to the tune of more than 2.5 to 3 million square feet we can foresee will be contributed by Life Republic as well. So overall pipeline for Pune is very much in line, and most of the projects have a visibility of launches. At Mumbai, Lakshmi Ratan project at Versova is set to launch in Q2. We have already finished the demolition work and secured most of the sanction. What is awaiting is commencement certificate and the RERA approval. Post that we are good to go. At least on the ground we started the work of demolition and That means we are already in the phase of launching this project. But yes, there are few projects where we see certain challenges, but more or less 6 to 7 million square feet is we are quite confident of launching during the financial year.
So any value you would like to ascribe in terms of sales inventory of these launches?
See, rather than value, because these are all different region and all, but it will definitely more than 5,000, 5,500 plus.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. The next question is from the line of Shreyansh Mehta from Equirus. Please proceed.
Yeah, thanks for the opportunity. Firstly, sir, congratulate you and the team for the new version of PPT. Appreciate the efforts put behind that. One suggestion, if you can, continue putting the earlier version of the launches, which was the part of the PPT, that would be really helpful.
Sure, Shreyansh.
Yeah.
Even though...
Yeah, sure.
Yeah.
Sure. Sir, my first question is again on the launches. So the new BD Vadgaon which you discussed, so will that entire phase of 4,000 odd crores be opened, or will it be in phases?
No.
And if you could, yeah, sorry.
Sorry, Shreyansh.
Yeah, so just continuation of this, if you could just broadly split in terms of launches, how much could come from Pune and how much from Mumbai?
So Shreyansh, to answer your first question about Vadgaon launches, it cannot be launched at altogether an entire project, but yes, this is a phases wise launches. It's one of the substantial project, almost 5 million square feet of a total development, potential development of the project. So out of which we have well planned with 3 or 4 odd phases for the entire project to get launched. So the phase 1 will be around 1.5 million square feet of the launch, and for which we are in the phase of securing all the approvals. Coming to the second questions, like what is the distribution in Pune and Mumbai. So in Mumbai, we are hoping under approval is almost 0.5 million square feet area is already under approval, and to the tune of 5.5-6 million square feet will be in the Pune region.
Okay. So any value, I mean Mumbai per se, will it be closer to, of this launches which you talked about 5,000, Mumbai would be closer to 1,000, 1,200 and Pune would be the balance?
Yes.
So, and within that 4,000 odd in Pune, would LR be closer to 2,500 odd crores?
Yeah, 2,500 crores.
Got it, sure. And so my second question is on the new BD. So now that, will we wait for the new management team to take over, post that, we'll go ahead with BD? How should one look at BD going ahead?
As you are aware, we are in middle of the significant transaction. Obviously, after the first tranche of, preferential issue and the infusion, by and large, the focus is on the growth and the BD as well. Still, there are few deals on which we are really on a very advanced stages. So we will definitely, once we see a sizable development, we will surely announce those deals to the market.
Thank you. The next question is from the line of Biplab from Antique Stock Broking. Please proceed.
Thank you for the opportunity. I have just one question. Could you please share the expected timeline for the conclusion of the Blackstone transaction? I mean, the open offer and promoter share purchase. Just ballpark timeline would be good enough.
Yeah. Thank you. As in my opening remark, I already mentioned that the primary preferential allotment has already concluded. However, for the open offer, CBI approval is awaited. Obviously, the timeline but it has to happen anytime soon. That's what we are hoping. But as of now, a specific timeline cannot be committed for that.
Okay, thanks.
Thank you. The next question is from the line of Hussain from Carnelian Capital. Please proceed.
Want to understand as to currently how many people from the Blackstone are basically looking to be on the board, and what is the long-term plan? Is there any drawing board, any plan which is being drafted for next 3 to 5 years as to how to scale up, and what will be the long-term picture in terms of how if you can throw some basic glimpse of it would be also helpful and meaningful.
No, so Hussain, thank you very much for this question. Obviously, Blackstone has partnered with quite a few companies in India, and they have solid partners for most of these investee companies. Likewise, for Kolte-Patil also, this partnership will definitely work strongly for the company's growth. But to answer this, what are the roles and all that thing, I think these are all something some strategic decisions. So on which we can definitely update you as and when this entire transaction get concluded, and post that once this entire relationship established and at a strategic level, then only it's the right time to explore this.
Got it. And that's it from my side now. Thank you.
Thank you. The next question is from the line of Rohit from iThought PMS. Please proceed.
Yeah, good afternoon, everybody. So, sir, just I think on the transaction you've already mentioned that you'll come back whenever that gets consummated. So, sir, from a pre-sales point of view this year and also on a reported basis, what are you sort of guiding? So, I think you'd mentioned that a large part of the pre-sales last year, launches could not get completed because of the delay in approval. So, in terms of launches and hence the pre-sales, what are you guiding, if you can share that, and also the reported deliveries this year and broadly the margins that you are looking at?
Yeah. Thanks, Rohit. So on the pre-sales side, looking at last at least 3-4 years, we have constantly delivered 23% of a CAGR growth, and we hope that will continue the growth at a stronger pace. This year we really have a very strong pipeline across Pune and Mumbai region. Hopefully the environment of approval and all that thing is supportive. And with all these things, we are quite confident that this year as well we will have 30% plus year-on-year growth in terms of the pre-sale guidance. More specifically, quarter one itself has seen 5% growth in the volume. So overall, for the financial year, we are quite confident of delivering above 30% YOY growth.
Okay. So around so we did around 2,800 crores kind of pre-sales last year. So we are looking at around 25-50% growth in this, right?
Yeah.
And so the launches then they would be like more towards the second half, or because first half is already done, and in your presentation there is not much mentioned, so it will be more towards Q3, Q4, and because that also has a bearing on achieving this number. So just wanted to get that sense.
So launches are across, even in quarter two we have launch. As I mentioned that in Mumbai, Lakshmi Ratan at Versova, we are set to launch in quarter two. At Pune, at NIBM, we are set to get the launch for the project. Even in Life Republic, few of the sector we are set to launch in quarter two. So launches are planned across all the quarters during the financial year.
Okay. And sure, P&L, if you can answer that, what is the kind of P&L you are looking for FY26 on a reported basis?
So as you are aware, we follow the CCM based accounting method here. Revenue recognition happen based on the completion and the possession. Obviously, so looking at the completion target or maybe the possession target for the financial year, we have quite a few sector at Life Republic like R13, R10, R31, 17. Then at Little Earth, one phase is will achieve the completion. At Mumbai also at Sukh Niwas, we will achieve the completion. So with all this thing, we expect a steady growth of revenue recognition during the financial year. But more specifically about the guidance on P&L, maybe next quarter we can really provide you a right set of guidance. But as of now, it looks very healthy, and at an overall financial year, it will be far better than the last financial year.
And margins also, you I think mentioned should be in teens, right?
Yeah, margin I already mentioned. Yeah.
Fine, sir. I think hopefully by next quarter, I think we should have more clarity on the transaction as well, right, sir? So
absolutely, yeah.
Okay, so in that case, sir, will we have something like an investor day or a call post the transaction, or it will be more like with the quarter 2 call only? Anything you plan? So just to understand.
We'll let you know about that.
Okay. Sure, sir. All the very best. Thank you.
Thank you. The next question is from the line of Himanshu from Buglerock Asia. Please proceed.
Yeah, hi. Good afternoon. My question was on the collections for the quarter. Okay. The area under progress or sales and work under progress, that area has increased quite materially and in last 1 year. And also what we have done is sustainable sales. Okay. So we're not at the time of launch. So sustainable sales, our understanding is the upfront payment will be much higher because a lot more construction work has happened. But our collections have dropped quite materially, and even if we compare the construction spend what we were doing or we did in the same quarter last year versus this year, it is same. So is there some slowness on the construction activity, or and why would the collections have fallen so low when majority of the sales is in sustainable sales and area under construction is significantly higher than 1 year back?
Okay. Thank you, Himanshu. So more specifically, last financial year, FY25, where we have a total collection, a strongest collection of 2432 crore, 2400 almost 32 crore of which has significantly shown a growth, and we have demonstrated this strong collection growth, which is resulting from, as you rightly mentioned, on the improved constructions and operational efficiency and healthy pace of project execution. We hope during the entire financial year, since this is just a first quarter, but as compared to the last year, the collection will be definitely at a stronger pace and will show a constant, steady CAGR growth, whatever we have experienced in last 3-4 years. So we are quite on the track of our collection target even for this quarter. It is all depend. It is not like the only area under construction gives the collection. Sometime milestone, because it's all depend on which milestone which gets hits in which quarter. So during the quarter, there are few projects where already the milestones were hit in last quarter.
Ladies and gentlemen, it seems that the management's line has been dropped. Please stay connected. We'll join them shortly. Ladies and gentlemen, we have the management connected. The next question is from the line of Vishal from Trinetra Asset Managers. Please proceed.
Thank you for the opportunity. Am I audible to you, sir?
Yes, sir.
Yeah. So I just have single question. Like with the 1% GST benefit on sub 80 lakhs home and PMAY subsidy expiring in March 26, and construction input cost is also going up. So how are you repositioning your product mix and pricing specifically in the affordable segment, like to sustain bookings, velocity, and EBIT margins? Could you throw some light on it?
Thank you, Vishal. So, Vishal, we are really focusing more on a mid to mid premium and the luxury segment more. We are not as such into affordable segment. Again, overall as a, maintaining and sustaining our margin, which has proven by our last 4-5 years of APR movement, which shown year-on-year growth of 8%. So we always try to maintain a healthy pace of volume as well as maintaining the sustainable margins by way of a better pricing.
Okay, that's it from my end.
Thank you. The next question is from the line of Johan from Motilal Oswal. Please proceed.
Yeah. Good evening, sirs. Thank you for the opportunity. Am I audible?
Yes.
Yeah. So I have two questions. My first question is on the line of launches. From last year, the other launches in Mumbai, which are in Goregaon, another is Vishwakarma Nagar and the Jal Nidhi project. So these three, are we still expecting to launch in this year, or are they further pushed forward? That is my first question.
Okay. So as from Mumbai pipeline of our total project which are under approval, as I already mentioned that Lakshmi Ratan Versova project is all set for the launch during Q2. However, there are few projects which are mainly on account of certain eco-sensitive zone related environment clearance approval which are little getting delayed. There are two projects at Dahisar which are delayed in launches on account of pending height clearance. So there are certain, even though these projects are under approval phases, but despite it is more or less industry-wide issue, so as of now it is difficult to comment on those launches. But
sure.
We are quite hopeful. Once this issue will be on track, we will definitely try to launch these projects sooner.
Okay, great. And my another question is on the lines of business development. So any land that you're currently looking at, or if you can give the guidance for the full year for business development?
Yeah, we are looking at quite a few active transactions and much more at advanced stages. Few documents has reached to a stage crossed the due diligence and on the final documentation as well. But yes, once this will get concluded, we will announce to the market. As an overall business development, as I already mentioned that the primary focus, the sustainable operating cash flow in hand, the Blackstone infusion, and with all this respect, the business development is on our top priority. That will be definitely better than the last year. We are intent to expand our footprint in MMR region as well beyond redevelopment, and definitely we will capitalize on that huge MMR opportunity with the infra growth. Even in the Pune region, there are a lot of metro development and infra growth corridor which are opening up. New micro markets we are finding out where there can be a better opportunity for the growth, either on the outright JV, JDA, all the possible options we are working, and we are quite hopeful that it will be much more better than the last year number.
Sure. Thank you. Thank you very much.
Thank you. The next question is from the line of Shubham from RV Investments. Please proceed. Hello, Mr. Shubham. The next question is from the line of Dhananjay Mishra from Sunidhi Securities. Please proceed.
Yeah, sorry. Sir, what is the value of our unsold inventory of ongoing project or complete projects?
So as we have already said, sir, rather than value, it is, the unsold of ongoing, we have already mentioned even in our extra presentation, but the total of it is almost 3.5 million square feet in hand across Pune, Mumbai.
Okay. So 3.5 million is unsold and 6 million is a pipeline to be launched.
Yes.
Ladies and gentlemen, who wish to ask a question, please, you may press star and one at this time. Participants who wish to ask a question may press star and one at this time. As there are no further questions from the participants, I now hand the conference over to the management for the closing comment.
Thank you once again for your interest and support. We will continue to stay engaged, and if you have any further questions, please feel free to reach Dipti Rajput at KPDL. Look forward to interacting with you next quarter. Thank you very much.
Thank you very much. On behalf of Kolte-Patil Developers Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
If you found this video helpful, please like, share and subscribe for latest upcoming videos. If you found this video helpful, please like, share and subscribe for latest upcoming videos. If you found this video helpful, please like, share and subscribe for latest upcoming videos.